Hello, good afternoon, everyone. Welcome to this webinar of Federal Land called the Philippine Economic and Housing Market Forecast for 2021. This afternoon, we have with us our guest speaker, Mr. Royce Christopher Aguilar. He is an equity research analyst of First Metro Sec of the Metro Bank Group. This afternoon, we'll learn about the latest real estate market trends and forecasts to make smart investment decisions.
Hi, good afternoon, everyone. Can you hear me now?
Yes.
Okay, so I'll be introducing our guest speaker for today. So, Mr. Royce Christopher Aguilar is currently an equity research analyst of First Metro Securities Brokerage Corporation. He heads the retail research division, specifically in charge of the creation and maintenance of the daily reports within their website. Royce is also the co-creator of First Metro Securities Brokerage Corp's Traders Playbook, a company report that incorporates both fundamental and technical analysis. The said report has a batting average of around 70% for the past 2 years. He graduated from the University of Santo Tomas with the degree of Bachelor of Science in Business Administration, major in Business Economics. Royce has been invested in the market for several years now. He got his inspiration in investing in the stock market when he got an internship at Wealth Securities Inc. He deepened his knowledge in investment when he got an internship in the Investment Research Division in Metro Bank Trust. So, everyone, without further ado, let me introduce Mr. Royce Christopher Aguilar.
Okay, so good afternoon, everyone. So I'm Royce Aguilar. I'm part of the First Metro Securities. So I'm very thankful you invited me, guys, here this afternoon. So basically, what we will discuss today are a gist of what we think will happen both in the equities and in the property market this year. So of course, first before anything else, before we discuss our outlook, let's summarize what happened in 2020. So again, I'm the first Medosec Bank Group, and based on what Yana read about me, I've been part of the Metro Bank Group ever since my internship days. So basically being part of the GT Capital, our sister company, Federal Land. So it's really a good company to work with, and I'm happy to share with you our summary and outlook for the stock market and the property market. So first, we'll discuss the summary, and then again, we'll talk about our outlook for 2021 and property sector outlook. So first, let's summarize what happened in 2020. Of course, this also helps you guys get the gist of probably what also affected the property market. So first, in terms of what happened in the PSEI, so that's our index here in the Philippines. So it dropped by nearly 9%. So what made the market go down? So of course, no, needless to say, these are the reasons. So first, early as this year, as early last year, even prior to the pandemic, we already had this uh, significant headwind in the market, specifically the Taal volcano eruption. And then the second one, there was already regulatory risks, specifically the government targeting the water concessionaires and even ABS-CBN. So that actually affected market sentiment a bit also. And then lastly, of course, COVID-19 related lockdowns and other restrictions. So that made the market go down as low as 40% in just 1 month, right? So what supported the market? Keep in mind the PSEI, the top 30 the 30 biggest companies here in the Philippines, um, was just down by 9% despite all of this calamities, health related um, issues. So what did support the market? So these are actually your catalysts. Why the market was just down by single digit last year. So right after the COVID-19 pandemic, right after the lockdown restrictions, there were already monetary and fiscal support from the Philippine government. And then come May, come June, we were already seeing further reopening in the Philippine economy. And then come October, 100% capacity is already allowed in hotels and the like. And then as the year came to an end, we were already seeing improving economic data in the Philippines. Of course, new US president is also good for global markets, also the Philippine market. Why? Because there's more stability in terms of policy, right? Less rhetoric, less tweets from the president that actually affected global market sentiment as well. And then lastly, specifically the last 2 months of 2020, we saw vaccine-related developments. So that made the market ended above 7,000 despite going as low as 4,000. And you will see it here in the chart. So I've discussed what made the market go down, what supported the market. This is actually a good way to take a look at how the market um, went about last 2020. So there was a Taal volcano eruption, water concessionary issue. So it was just down by slightly at that point. But after the COVID-19, the lockdown in Metro Manila, the lockdown in Luzon, the community quarantine restrictions that made the market really go down. But again, given the monetary, the fiscal support from our government, the market swiftly rebounded, right? And then you will see there at the latter part of the chart, the further reopening of the economy and then positive vaccine development spurred the rally by end 2020, right? So what's our outlook? What's our outlook in the stock market come 2021? So again, we ended at 7,100. Actually, right now we're actually trading at 6,900. So the market even went lower this week alone. So in terms of for you guys who want to diversify, of course you're looking into property also. But in terms of our outlook for equities, we see the index target to end at around 84 to 86. So basically, our forecast is hinged on these things. Number one, faster snapback in demand. So number one, under faster snapback in demand, you'll see healthier balance sheets, meaning people have more savings. Of course, I'm not talking about the ones who lost jobs, but based on the data that we have, a lot of households exited the pandemic like with more savings, especially the ones who were not laid off, especially the ones who managed to transform their business, their companies to work from home setup. So they managed to have less transportation costs. So they have more savings. And then, as mentioned earlier, we had unprecedented government rescue packages, right? And then next is resilient remittances. Keep in mind, remittances, if we take a look at the data, but as of end November, remittances was only down by less than 1% compared to 2019. A surprising data for us, right? And I believe we can talk about it later on. That remittances is actually one catalyst, right, for the property market. So keep in mind, remittances remain resilient last 2020, and you will see there in the chart. You will see there that consumer and business confidence are already rebounding from its lows last March, last April. So people are getting more confident right now. That's actually one reason why we are positive in the equities market as well. So next is profit margin expansion. Keep in mind right now, as to combat the economic impact of the COVID-19, central banks all around the world lowered their interest rates. And right now, many companies are taking advantage of low interest rate environment to raise debt, right? So again, just to connect it to the property market right now, probably some of those who have cash, excess cash, wants to take advantage of the low interest rate environment, right? So that's how it benefits also the equities market. Lastly, the passage of the Create Bill. The Create Bill is basically a bill in that government is trying to pass, which lowers corporate income tax. So that's good for companies. Hence, that's also good for the stock market. So our bottom line, of course, why would you want to invest in PSE compared to other countries? Basically, for us, the successful rollout of COVID-19 vaccines will speed up easing of restrictions. Bottom line, relatively to other countries, we're still a bit stricter in terms of restrictions. How? Number one, in mobility, you will see in public transportation, um, people still have limited seating capacity, right? Limited routes, even released for the bus and the jeepneys. But keep in mind that while mobility, you'll see in the chart, mobility is improving, creeping up bit by bit. It's still way below pre-COVID levels, right? So bottom line, there's upside, meaning we have more way to go. Next is in tourism. Tourism, in terms of air traffic data, you will see here, it's not that, it's improving, but not that much, right? Mainly because the government is being careful, right, in the opening. Strict protocols remain in force, travel permits are still in place, right? So mall foot traffic also, there's still age restrictions in food services. There's still limitations in operations. You will see here in our graph that quarterly beer volumes. That's actually one indicator of ours, because that's one indicator of ours to gauge tourism, right? For us, there's still upside. Bottom line, what I'm telling you is data is improving, but it still has a long way to go. Bottom line, for investors like us, for investors like you guys, there's still upside in the market. For probably for some of you, or some of you are already thinking maybe the market has already gone up. Like maybe I'll stay aside, maybe I'll go with fixed income and the like. But bottom line, we still see more upside in the horizon. That's our point here. Okay, so that's for equities. So now for property sector outlook, it's needless to say, when the pandemic came, early 2020, property was not our top pick. It was actually consumer staples, mainly because these consumer staple names are your beneficiary of panic buying in groceries and the like. Now, come 2021, we are looking into further reopening of the economy, um, further mobility, further people having these excess savings, trying to put um, their eggs to diversify their eggs in different baskets. So actually, our top pick or sector for this year is actually property, and we'll tell you why. So first one, I would like to discuss the key trends in the property sector, right? So I would not basically the story here is, as mentioned, there were limited selling activities during the quarantine restrictions. But when you take a look at the data from property companies, even federal land, we looked into the data. They really took advantage of online selling. Actually, online online inquiries have significantly rallied this pandemic. And bottom line, right now, given the further reopening, given the transition to online, you can see the best of both worlds in both approaches, right? That's the trend for the residential launches. For office, it's mostly stable. It's just that the risks right now are for the pogo sector, the Philippine offshore gaming operators, right? So right now they're in the eyes of the government in terms of regulatory. So of course, worst case scenario, once they all of those pogos go away, for example, due to strict government measures, there's going to be downward pressure right now in the property prices. But of course, status quo right now, that's not yet it's business as usual for offices. So the key trend is lifting of quarantine measures are still not that fast, right? So the government is currently hesitating to make more people go out, specifically the ones below 16 and above 65 years old. Other key trends, as mentioned here, right? Um, Rental concessions. So property developers mostly charge variable rents and offer 30 to 50% discounts to pure fixed rent tenants, right? We saw that a lot last year. Thank you. So another key trend was the rise of e-commerce. So it was pretty obvious for all parts of the world, the rise of online selling, right? So that's what actually property companies like Federal Land took advantage of, like online inquiries spurred or hastened the recovery in residential sales. So there. So basically now our outlook come 2021, come this year, we expect now a ramp up in construction activities to allow residential developers to address these tight inventory levels that came last year during the pandemic. So basically, it's more of a recovery this year. Of course, it's pretty obvious that almost everything that will recover this year. But as mentioned, property is our top pick this year, mainly because it was really dampened last year in terms of residential sales, especially the luxury residential. So now, come 2021, come this year, we really expect residential sales to rebound, and not only this year but come 2022, mainly because construction activity will also wrap up. Especially because there were construction limitations, construction restrictions last year also. So we expect those that are being built right now to finish quicker than initially expected. On the office space, we still see Philippines being the outsourcing hotspot, right? BPO industry um, is still the trend here. Now hence we expect stability in the office sector. And why is that important? For example, I'm an investor. I'm investing in real estate, in residential real estate. Why is it important that the office sector remains stable? Because as mentioned earlier, if we see people not utilizing or leaving office spaces and just deferring to work from home setup, there will be downward pressure on property prices. Why? Because for example, I'm working in a BPO. My hometown is in the province, and if I'm comfortable and if I'm allowed to from work from home, I'm just gonna leave my condo. I'm gonna sell it to other people. I'm not gonna pay anymore. So there's downward pressure in property prices. And that's also the case, especially for the Chinese tenants who take who account for bulk at some point in some properties, right? So that's we don't want to see any significant downward pressure in the office space. So bottom line, our outlook is stable office space. Okay. So of course, it may take some time to bring back the peak of the office space, but bottom line, we already saw the bottom last year. Okay. Next is, yes, as mentioned, the BPO demand will offset unwinding of BOGO exposures. We are seeing companies right now to limit their exposure to these BOGOs, mainly because of regulatory risk, to limit the downside, to limit the surprise. For example, once government imposes significant regulations on them, which will result to these pogos going back to their hometown, fleeing the country, and the like. So bottom line, stable office and recovery in residential sales also. So again, another is reopening. The reopening prospects are really there. So of course, once the COVID-19 vaccine is rolled out successfully in the country, we will see pent up demand. We will see recovery in malls also this year, right? Um, so that's the thing. We will see a recovery from there. The thing we expect. The thing we expect for okay. So the thing we expect now to be slower than expected in terms of recovery is the hotel industry. So the hotel industry, given for example in events just like this, it can already be online. It could already be done online with less spending from the host and the like. So bottom line, we expect the hotel business to recover or at least go back to pre-COVID levels come 2023. So hotel business will be the slowest to recover. So bottom line, the residential part will pick up the slack in the property sector. So of course, any investment comes with a bit of risk. So bottom line, the risk we see, number one is outbreak returns in waves with new variants. So we already seeing several variants from UK. We are already seeing several variants in South Africa. But the good news is vaccine providers are saying that their vaccine that they currently develop can combat those variants. So there. No, number two is contraction in oil remittances. Of course, remittances has been strong relatively strong compared to expectation of economy in 2020. So, nevertheless, we see a contraction in remittances. In sorry, so a couple of thoughts before we end. So, jobs creation. So, as mentioned, a lot of people still got laid off. So for example, some companies were currently just hanging on if they decided to just shut down their operations, so more people will lose their jobs, right? So that's also a risk. Lastly, the lower VAT threshold for low-cost housing. This is actually part of the train law that was implemented a couple years back. So now the VAT threshold for houses will be lowered to 2 million from 2.5 million. So this should negatively impact demand for lower price residential units, right? So specifically the lower price residential units. Nevertheless, what will support that is the excess savings, the stable oil remittances, the economic prospects in the next years, especially now. We believe we already reached the bottom. We believe we already experienced the worst last 2020. So thank you, and if you have any questions, let me know.
All right, thank you, Sir Royce. Now we are open for our question and answer portion. If you have any questions for Royce Aguilar, you may chat them on the chat box or you may unmute your mics. Okay, we have one question here, Sir Royce. Pre-pandemic, this has been a common topic already, and a lot of people have been asking whether there's going to be a property bubble in the market here in the Philippines. So that's pre-pandemic. So how about now that it's pandemic? What can you say about the property bubble here?
Okay. That's actually a good question. Of course, prior to the pandemic, we were already worrying. There were several properties being built around your corner, um, every year and the like. But I think right now, I think it's one of the least of our worries that there will be a bubble. At the end of the day, as we said, there can only be a bubble if there's excess supply and lower demand. And right now, we are already seeing demand. And you know, as mentioned, people have excess savings. Not, of course, of those who got laid off are other cases. But as mentioned, we saw excess savings last 2020. So we think there will be demand in 2021 moving forward. So that should cushion the possibility that there will be a bubble. So bottom line, it's one of the least of our worries right now. We believe there's enough demand to cater to the supply in the market. So that's my answer.
Thanks, Royce. There's another question here from Mr. Ba. What is the forecast for rental income real estate? So leasing for 2021.
Okay. So of course, I can't specifically put a number, but I think in terms of rental, the leasing industry, I think it's very important now to pinpoint the purpose of leasing. So for example, if you want to lease to, for example, if you target leasing near universities, that's probably um, still a bit slow right now, mainly because students, professors are adjusting to the study from home setup. But for example, if you want to target luxury residents, I think there's demand from there, especially we're already seeing even clients of ours, high net worth clients of ours are itching to buy a property, and they just didn't buy last 2020. Of course, there's also effect in pandemic, but they're also waiting for prices to dip a bit. So bottom line, there are clients out there on the luxury residential side, even the mid-income residential that you can cater. It's just that I think there is right now, if you want to lease out to students, probably that's going to take a bit more time. But mid-income luxury residence, lease out to the mid-income, high net income buyers. That's, I believe that should be your target to rent out to this
Thanks,
kind of.
Royce. Yeah, I have a follow-up on that question from me. Kasi, yeah, the rental market, I mean, for some people, they think it's low, but we all know that the businesses, the IT, the medical industry, the logistics business, the e-commerce business, they're all booming right now, no? So,
Right.
would you be able to recommend to us which particular locations we should invest in for real estate to tap into these industries?
Okay. Well, to be honest, in terms of location, we still prefer the prime area. So it's already given the likes of BGC Makati, Ortigas also. One growth prospect, if you want to tap into it, in terms of one growth location, is around the Cavite area. I think a lot of property developers are looking into that right now. Even federal land, are they're already well positioned actually in that area. So I think just like in stock market, it's never too late to invest in the top companies. So say I think in the property sector, it's never too late to invest in the prime areas. So the likes of BGC Makati, Ortigas, um, and others. If you just want to have this growth location, I think it's around the Cavite area and even the Pampanga area, which they're trying to develop, right? Also, so there.